Today we're gonna discuss a very exciting topic, a topic that is definitely on the hot list in the financial industry, on the hot list in the technology industry, and that is decentralized finance. Lots is happening in that space. It's an emerging space, but where we see a tremendous amount of activity, as well as lots of new entrants in that market and big investors participating in that market also. I'm extremely pleased, extremely honored to have with me today a fascinating group of stakeholders in the industry. First and foremost, Kevin O'Leary, business mogul, financier, and investor in the DeFi space. And Kevin is going to give us the keynote speech today, and he's going to discuss with us why DeFi matters and why he is getting very, very excited and is extremely interested in that space. And then next to Kevin, we have an incredible roster of CEOs of leading companies in the decentralized finance space. And I'll take them by alphabetical order of the first name, so I don't do any preferencing over here. We have Andrew Kiguel, who is the CEO of tokens.com. We have Ben Samaroo, who is the CEO of WonderFi. We have Brian Mosoff, who is the CEO of Ether Capital. And we have Wouter Witvoet, who is the CEO of DeFi Technologies. Welcome to all of you, and again, great to have you on board. Before we get started, I would like to say a quick thank you to all our sponsors who made this event possible, and a great group of neo-partners, including Baker McKenzie, Borden Ladner Javet, Dentons, Goodmans, Gowling, McCarthy Tetro, Macmillan, Miller Thompson, Odyssey Trust, Olympia Trust, Stikeman Elliott, and Wilder Borderlees. And you will see there's a good number of law firms in there who are also quite actively involved in files around this space. But let's get started now, and I would like to give the stage to Kevin. And Kevin, tell us a little bit more about why you think that the DeFi matters and why you are so involved in it today.
Thanks, Jos. I'd like to speak as an investor initially, and every investor looking at this phenomenon, really, because the amount of capital going into DeFi now, both in startups and more institutional platforms, is staggering. It's billions of dollars. It's still a highly unregulated market, which is unusual. And we're going to talk about that a little bit, because early adopters of DeFi, crypto, level 1, level 2 chains, all kinds of tokens, are extremely knowledgeable people that have grown up within the crypto community, and that is primarily where a lot of this activity is occurring. But recently, when institutions look at the potential for productivity enhancements, fee reductions, new forms of payments, new international agreements that could change the way even other traditional securities like stocks and bonds are traded and owned, there is an unprecedented amount of opportunity here. And yet at the same time, the regulators in different jurisdictions, every country is different at this point, are struggling with trying to adopt protocols that will allow this productivity to be unleashed. And so as an investor, here's your dilemma. And I've lived through this, and I'll use my anecdotal story because I think many people relate to it. About 18 months ago, in our operating company, we decided to reduce our exposure to commercial real estate for a wide range of reasons. It was about 31% of the portfolio. We took it down to 8%. It generated a tremendous amount of cash, at least in terms of the percentage holdings within our company. And normally we would go to cash desks that we traditionally worked with and tie it up for 30, 60, 90 days. And we have to be compliant, obviously. We are compliant internally. We're compliant to our external auditors, and those auditors sign off on statements and provide reports to the regulators. So at that time, when we went to the cash desk, they were offering 21 basis points in interest. Now, that is not sufficient to beat inflation, which is currently above 2%. And so we have a fiduciary duty to not lose money. And that is definitely losing money. If inflation's 2% and you're getting 21 basis points, you're losing a lot of money, even on a quarterly basis in terms of buying value or currency value. And that was our first year and a half ago journey into decentralized finance. And it's a use case. It's certainly one of great interest now, because what I'm going to describe to you, while it was very nascent 18 months ago, now has about $30 billion invested in the same strategy. And while that's not a lot institutionally, it's a whole lot more than it was 18 months ago. So what we did was we found a platform that we could be compliant with. At that time, it was Circle, another company that's in the space. We used their USDC stablecoin, which is a well-known stablecoin now, along with DAI, and Tether's maybe a little more controversial. And we converted to USDC, and then we staked it. In other words, we started writing contracts for 30, 60, 90 days and started generating, I don't want to call it yield, because the regulator has not liked that word in the last couple of weeks, but I'm calling it enhanced value. And so I was able to generate anywhere from 3.8 to 5.2% using that strategy and rolling these contracts. Now, to do that, I had to hire 3 new people within my firm, because it was so damn complicated and so difficult to do on a compliant basis. And it was so challenging to educate our external auditors, our internal compliance departments. It was an uphill battle that every institution is fighting right now. That's the bad news. The good news is, once we got it structured and we worked it out, it is now running smoothly and compliantly, and we're reporting it. And it's working. And it's actually a very, very useful tool for us, just managing that one use case, cash, doing way better. I'm not saying it's risk-free, it isn't, but a stable coin like USDC is backed by some pretty hard assets that I'm willing to take a chance on. Now, the reason I'm excited about it as an investor, and I'm investing in many of the companies of which we have CEOs here right now, is that their job is to simplify this. Their job is to find a way to work with regulators so that investors can not only buy their stocks, but invest in their platforms and use their services to move into this new productive space in financial services. It hasn't happened yet. I mean, when people talk about just Bitcoin, the granddaddy of cryptocurrencies, and they say institutions are using it and buying it and allocating to it, that's simply not true. It's a fraction of, I work very closely with sovereign and all kinds of pension plans. They are very interested, but they have no infrastructure, no compliance infrastructure by which to trade Bitcoin while the regulator debates what it is and how it's going to be regulated. That's not going to happen. But at the same time, why I think investors should be taking positions in these companies, and the panel that we have here, is that there will come a time, probably in the next 36 months, where regulators, and the big one of all of them is the US regulator, will start to decree what they consider securities and whatnot. We're expecting to get some information just on stable coins in short order that will bring in, once it's regulated, and however it's going to be regulated, that will bring in billions of dollars into just the use case that I just talked about. And so I'm very excited about the potential of this market. I'm very excited about these companies, although they're nascent in some cases and early, and how interesting they are looking at the different ways to solve these problems. But it's the unleashing, the tremendous potential for this space, and why investors should allocate to it. In my case, I'll disclose what I'm doing. By the end of this year, we will be 7% allocated to the equities of the companies on this panel today, and actual chains, tokens, Bitcoin, Ethereum, and many others, which is a whole lot more than 3%, which was just 2 quarters ago. And we are comfortable doing that, even though it brings a lot of volatility into the portfolio. I'm happy to do it because I've become, while I was a skeptic just a few years ago, and I can't seem to get rid of that video that's floating all over the internet of me calling it garbage on CNBC. It is not garbage anymore. It is a big part of my portfolio because I have to change when the environment changes. And it is changing rapidly, as Jos said at the beginning of this call. Regulators all around the world, including Canada, in Europe, Switzerland, Germany, France, Australia, the Middle East, and the United States are working on figuring out a protocol that I believe eventually will be global. And if you're not an investor in the early stages, you will miss out on a lot of the appreciation, that's the potential appreciation that is going to happen as investors figure out what these companies on this panel are going to be doing. They're going to be simplifying these processes I talked about. They're going to be doing it in a way that allows for compliant reporting. That's how they're going to add value. And above all, they're going to commercialize it and simplify it. And all of those edicts and all those mandates is where the value will be created. They're all doing it in different ways, and that's just fine. That's the innovation. And I'll give you one other use case before I hand it over to you, Jos, to get this thing going. I work in the largest market in the world, the currency market, the FX market. There is no market larger or more liquid than that. And I'll give you my challenge and why I'm so excited about decentralized finance. Let's say I'm buying an index, which I am as we speak, of European stocks. So I'm going to be buying on the exchanges of Zurich, in the Eurozone, and in London, England, because there's 50 names over there that I have indexed so I can get exposure to that market. The Roches of the world, the Nestle's of the world, and many other companies. I have to take US dollars or Canadian, doesn't matter, and convert it into the local currencies, the euro, the Swiss franc, and the British pound. When I do that, I meet a currency trader, an FX trader, an individual that adds absolutely no value whatsoever to my business at all. They clip a fee on the way in and they clip a fee on the way out. And they have been doing that to me for 40 years. I can't wait to get rid of them. This is one of my personal missions. And the way we're going to do that is to get regulators to allow decentralized finance to do those transactions at a much lower cost, a lot faster. It will happen in the years ahead, and it will fundamentally change the productivity of the currency markets. It's going to be incredible. Decentralized finance will do that. Regulators will get on board because it cuts fees and enhances productivity. This is the most exciting time ever to be involved in financial services. There's never been a time like it. The opportunities are immense. The creation of value is going to be in the trillions of dollars, and we're just getting going. And you can find a way to participate by investing in the companies on this panel. Jos, I'm going to hand it over to you. I think you're on mute.
Yes, this is much better when I unmute myself. Thank you very much, Kevin. And I think what I heard there is an investor that clearly is not only a believer but committed to this space. And I also picked up that you have a mission against FX traders, Kevin, but we'll make sure that we cut that out of the video so it doesn't reemerge in 10 years.
Sorry about that. I'm very passionate about that.
When some of the internet people are going to have it still moving around. But thank you for putting the scene, putting the foundation down for this discussion. Now I would like to move to our various panelists and ask each of them before we get into more generic questions. And yes, thank you. I see some of the Q&A coming in. Please keep doing that. I would like to ask each of them what their vision is about the decentralized finance, because it's four great companies, but you all take a bit of a different approach or different take on the way that you are bringing DeFi to the consumer. Could you share some thoughts about your vision, your strategy, your go-to-market, and how you are really going to enable that democratization element that is also inherent to DeFi? Something that you often hear is DeFi is making finance really available to everyone. So I'm curious about your thoughts and your ideas about how your company is approaching this. And I'm going to follow the same sequence as at the beginning and start with you, Andrew.
Thanks, Jos. And Kevin, thank you for that keynote. I think the common thread amongst everybody here on the panel is with respect to trying to find a way to bring DeFi exposure to public market investors. And I think where tokens.com is different than the other companies here, and everybody has their own approaches, we decided rather than trying to create a product to be the product. And what I saw, I was a banker for 2 decades, is very hard for public market investors to get this exposure to things cryptocurrency. Back in 2017, I started a large crypto miner to give people exposure to Bitcoin. Today, tokens.com tries to solve that exposure to DeFi problem by actually being the product and investing in the DeFi products, and then using a process called staking, which is the environmentally friendly version of crypto mining, to earn additional tokens. And so when I look at DeFi and where it's going, Kevin was absolutely right. This is the, changing the way financial services are delivered to people. This is making things, better yields faster. This is the borrowing, lending, and trading peer-to-peer without the use of a bank. And there's billions of dollars that's being raised and invested from Silicon Valley and Wall Street to enhance this. We at tokens.com are providing that exposure to our investors by buying those products, staking them, and then growing what I would call a large basket of cryptocurrencies that are directly linked to DeFi growth.
I really need to get better control of my mute button. Thank you, Andrew. And let's move on to Ben. Ben, what is your vision and your approach of bringing DeFi to the consumer?
Sure. So our view with WonderFi is that we're in the very, very early innings of DeFi and even of crypto. I think we're at about just over 1% of global adoption of crypto if you look kind of worldwide. And so I think it's really easy for us that have been in the industry for a long time to sort of lose sight of what the general adoption is of crypto, and then of DeFi especially, which is just a small fraction of that 1% number. And so we start to see some institutions getting involved, and some the regulators looking at the space. See some great questions in the Q&A on that, and excited to chat about that as well. But I think just really what we're doing is sort of taking a step back and really zooming out and looking at how we can bring this technology into the hands of the consumer, because in our view, it doesn't matter if the consumer can't use it. It's just going to be sort of a speculative asset that people invest in, and there's a case for that, but this can be something a lot bigger, and that's something that everybody with access to an internet connection can use and access this different functionality within DeFi. So I think we're at a super interesting time in the market where we're still in an early adopter phase, and early adopters use the technology a lot differently than I think the rest of the population will. So we're starting to see what the real use cases are that are driving adoption in the space, and so really with WonderFi, we're focused on creating a consumer friendly consumer interface so that we can onboard as many people into DeFi as possible.
Thank you, Ben. Moving to you, Brian, and Ethercap.
Hi, everyone. So Ethercapital is an Ethereum-focused ecosystem investor, and we kind of invest around 3 pillars in this space. One is we look at the protocol level, which Ethereum, is that token, and there's ways to make that asset productive, as Andrew was saying, through something called staking. And then we also look at the on-ramps into the space. And I think most people are familiar with retail-facing exchanges where people can go and convert their dollars into digital assets. We think a very important part of this new world that is being developed is ways for developers to allow people to on-ramp their dollars into a digital asset direct inside of an application. So a DeFi application. And so investing in and around that is very important. And then we do think that stable coins, which are tokenized forms of dollars, are going to be very important. Kevin mentioned things like DAI, USDT, USDC. These are just different flavors of tokenized dollars. We're very focused on something called Maker. It's a very specific protocol. And so as everyone's kind of saying here on the panel, this is very, very early days. What I think is going to be really interesting to watch is how the world evolves, where you've got a very Wild West, decentralized, anonymous group of people who are building, developing, tinkering, playing with these applications, really cutting edge stuff, exciting, dangerous, lots of things can go wrong. And then you have the regulated world where you see some of the very successful early DeFi applications start to try figuring out how can we push KYC into the borrow side, the lending side. Does that work? I don't know that there's actually answers to these things yet. I think you've seen some experiments take place. And so I'm really excited to watch, as Kevin was saying, the next 12 to 36 months. There's going to be a lot of clarity around regulation. There's going to be a lot of protocols that flourish, a lot of new companies and business opportunities. And so I think everyone on this panel, you know, has clearly taken the pill. We've seen where this is going. We're feeling around. There's a little bit of fog. We're not exactly sure how it's going to play out, but we know the technology is not going to go away. And now it's a question of how do you give investors exposure to this, either as everyone here is saying, direct through companies on this panel, or they can on-ramp themselves and make their own assets productive, convert their dollars into some digital form of money. And it's a really exciting time. So happy to be here and chat about all this stuff with everyone here.
Brian, and we're gonna finish this first question with Wouter for DeFi Technologies. Wouter.
Thank you very much, Jos. Yeah, I think what I heard from a few of the other panelists, which is what I'll add to, is this word democratization, right? Because we all want more people to have more access and have access to these new technologies. And what I've seen in parallel happening is that, you know, in the VC space where I was working before, we all benefit from the likes of Uber and from the Twitters and from the Facebooks and etc. But it is frequently the 1% of the 1% that gets the access and that really benefits from the massive growth and the sort of innovation that happens in this market. So DeFi Technologies was really born from a sense that we want to bring exposure to this decentralized finance to the public markets at a way earlier stage, so that more people can benefit from this growing market. You know, Brian, I like this way you mentioned about this fog, and I think no one really knows where it's sort of going on some fronts. But I think that's the exciting thing that we want to give public markets investors, and that they can join that journey and sort of co-explore where the areas where the scene is going. I think that's what makes it interesting for us, and to be sort of a pure play on decentralized finance.
So when I listen to everyone, I hear Kevin, you know, clearly focusing on, you know, from an investor perspective, this is the next thing, we have to be part of it. He really believes in it. I hear all of you talking about, again, getting access to those cryptocurrencies, to those tokens as a vehicle to get exposure to decentralized finance. And as you know, we need a little bit of controversy over here, so I will do it. Where are the solutions? Like, what are the solutions that we are building with this? Because at the end of the day, it's great to invest in all those assets, but where is it going to change our world? It cannot just be about investing. It's like, you know, it's like Kevin said earlier, I can invest in dollars. I'm not just investing in dollars for investing in dollars. I hope that I'm going to use it to do something with it, to do something that is going to impact and change the economy, the environment in which I live. So what are the solutions that we are looking at and that are going to transform the world in which we live? What are the solutions that centralized systems should be concerned about and worried about? And I hear there's a little bit of fog, but there has also to be, you know, some fog lights over there that allow us to have a view on where we're going with all of this. Brian, start with you on that one, because you were the one that mentioned the word solutions.
So I think, you know, we've lived in a world traditionally where capital has been locked into borders, into certain institutions. Retail investors have not been able to participate in finance to the degree that they would like. And a big part of DeFi is just democratizing that access, is allowing these assets to become more productive, to bring liquidity to assets that have not traditionally been able to be liquid to a global scale. I think not that we're going down the NFT rabbit hole, but this idea that NFTs could become collateral inside of DeFi, that you can have these assets that don't really have a nexus to the real world, I think is really exciting. I think people are looking right now to DeFi and crypto in general and saying, show me the real world use case for any of this stuff. You know, what is that going to be? And maybe this is a little controversial, but I think it's easy to say, okay, well, I understand that Visa is going to say that they're going to tokenize US dollars or work with someone to tokenize US dollars and then use that as a form of settlement between data centers, and that's what crypto is going to be. Fine. But I think that if you look at the early days of the internet, if you were to try and say, well, how is the post office going to use this, or how is a newspaper or a magazine just going to post their content online, and that's what the internet is going to be, you would have missed out on what was really interesting about the technology, which is that when it becomes digitally native, there's a whole new set of businesses and use cases that no one even imagined. And so social networking comes about, the world's largest, retail or Amazon comes about. There's all these things that you can't imagine because they just haven't happened yet. So there's going to be use cases like the Visa example, but there's going to be all new forms of businesses like the NFT stuff that's going on right now, which is just digitally native forms of art that people are going to use, and it'll become part of DeFi. And so there's lots of opportunities on both ends of the spectrum. So I think it's important for people to keep in mind that it's not just how is the real world or the legacy financial system going to benefit here. What is the use cases going to be that emerge that we haven't even imagined yet? And that's part of what's really exciting.
Andrew, I'm a capital markets guy. Your background is capital markets. I think you mentioned earlier you've been a banker for several decades.
I was a banker.
Yeah, you were. What is it going to be? What is it going to mean for our world, for the capital markets? Should I be worried? Like I'm running a centralized exchange. Should I be worried that it's going to be gone in 36 months?
Right. So you mentioned solutions, and I don't think right now it's necessarily about bringing new products. It's about improving antiquated banking systems. And let me give you some examples. If I want to send a wire transfer today as a corporation, I've got to get it to the bank by 3 o'clock. It takes about 24 hours to get to wherever I'm sending it to. And if I don't get it there by 3 o'clock, it goes into the ether. I've got to wait. In the crypto world, that's a bit of a joke. I can send any amount of money almost anywhere in the world within 20 minutes for about $1. Okay. So it's about improving antiquated systems. If you've ever tried to send money offshore, international remittance, they charge about, by the time it gets to the different places, it's about 9% that disappears in friction costs. Why? The Swift code system is old. It's based on paper. You talked about capital markets. It's T+2 right now. You buy a stock, it takes 2 days to settle. Why? Why do the markets close at 4 o'clock? There's people all over the world. And I think this is, I haven't even touched upon borrowing and lending. I deposit my Bitcoin at a certain institution. I'm earning far more than I would ever earn at the bank. And I can borrow from there and pay interest. So it's about updating and bringing technology and blockchain technology to the systems that are in place today that should be improved upon to make them faster and more profitable for the people using them.
And more accessible.
That's coming. I mean, that's what some of the companies on this panel are trying to do.
Yeah. Wouter, how would you compare? So you're based in Europe. You're an international and global company. But if you look across the board, do you see different degrees of adoptions in different parts of the world? Not sure that Wouter got that one. Wouter, are you?
Oh, sorry. Can you hear me?
Yep.
Oh, sorry. Yes, no, regarding the adoption on different geographies, for sure you see differences. So we, at DeFi Technologies, we started to list most of our products in Sweden, for example, because it has a very friendly regulatory environment and a very friendly jurisdiction which you can launch your products. FINMA, the regulator based out of Switzerland, is a very similar story. As you may know, Jos, They recently started what is called like a digital exchange, basically tokenizing stocks to make them easily tradable. And to Andrew's point, why can't you trade, in 24-hour basis? So I think definitely you see a lot of innovation in Europe. I think Europe has a lot of different countries, even though they passport, they do compete, right? So it's not like you have an SEC that is sort of a godlike power that gets to decide everywhere. I think that's the benefit of Europe, that people can shop around in different countries to see which regulation fits. And I think that's very healthy. I think what DeFi is bringing and what crypto is also bringing is also innovation on the exchange side and in the regulatory side. And I think that's very healthy for the markets and welcomed.
Ben, moving back to you now. One of your core components of focus is access, making it more accessible, allowing everyone to work with it. So if you look at your consumer base, how would you define it? What is the type of consumers that you are targeting, and what is it fundamentally that you want to bring to them? Because it is indeed about giving them access to a new type of asset, but it's more than that.
Mm-hmm. Our consumer base is mostly people that don't have experience with crypto, and then a portion of it is people that do own some Bitcoin or ETH, and really it's such an important demographic to reach because again, I think for those of us in the industry, we get really kind of caught in the weeds with people that have been in crypto for 3, 4, 5, 6+ years and sort of lose sight of what the larger population looks like. And what we're finding is that this segment of users or of people, they look at crypto a lot differently than your early adopters, like the people on this panel, and even in the ways that that Kevin was talking about in the keynote of how institutions are looking at investing in crypto. We're finding that people, there are definitely a large part of our kind of user base that are looking at DeFi because they want to earn interest on their assets. So just looking at that traditional banking model, they're used to depositing funds into their savings account and earning interest back. So there certainly is a large portion that's interested in that. But there's other demographics like the Gen Z demographic, which is the biggest demographic in the world and arguably the most important one for finance going forward. And they're less interested in earning interest. They're more interested in just being able to play, just to be able to get some skin in the game early. And they see that this new financial system is evolving and growing, and they don't want to get left behind is one aspect. And then they also just want to get familiar with using the technology and learning how it works. And so we see with the NFT world exploding that that's a really good example of how Gen Z just looks at everything differently. And so I think it's really important for us to take note of that, and then also be providing different avenues of access to these people that aren't the same as the ones that the early adopters use. Because again, every technology you see, the needs and desires of an early adopter versus a kind of a majority segment consumer, they're completely different. So if we keep catering to the early adopter, I don't think we're going to get past this sort of 1% mark for crypto and DeFi.
Can I just add one thing, Jos, before we go forward? I think for people who are wondering kind of what exactly is DeFi or why is it important, I think an easy way to frame it is that if you think of the traditional banking system and whatever innovation is going to come, from that world, that's a very top-down structure. And what's nice about crypto and DeFi is imagine that you have this more bottom-up mesh network, self-composed, structure where it doesn't matter if you're a big company or you're an individual who lives in Asia or somewhere in North America. You can publish code that creates essentially a bank, a lending service, facilitating a specific type of activity. And if there's social consensus that there's value to the thing that you've created, you will see adoption. And it didn't require the amount of paperwork, capital raise to publish that type of code, to participate in this new economy. And so what's really exciting here is that bottom-up like structure. when people talk about open banking, I always kind of look at it with a bit of a smile on my face because I go, what's funny is that the banking system's kind of fighting crypto. And if you believe in open banking, then you already believe in crypto. The question is just which direction are you coming at it from? Are you coming at it from the people who are just creating a network on their own, or you're coming at it from these kind of closed systems that are trying to open up various parts of data or accounts? It is the same idea. It's just democratizing and opening up that access and creating more and better products.
So I'm gonna ask Kevin to opine on something over here. So Kevin, we've been talking here about the solutions, about what DeFi is going to bring to the financial industry. I heard comments about how expensive payments are, cross-border payments, remittance, delays. I heard about SWIFT being outdated. And in fact, what we're talking about the banks, we're talking about the big ICSDs, we're talking about all the CSDs, clearing and settlement organizations. We're talking about some organizations like SWIFT, which are very established. How do you think they're going to react? Like, what do you see the world being in 10 years? What is going to be their reaction, and how is the world going to look in 10 years? Are they still going to be there? And
no,
that's a question for you because it's controversial, of course.
Yeah, well, there's two. If you talk to interested parties in decentralized finance or in crypto investing, there's really two groups, and you see this happen in some of the larger conferences. SALT just happened last week or 10 days ago in New York, and Bitcoin 2021 was huge in Miami with institutional investors. The original founders, if you want to call them that, the thought leaders, the academia around, this is basically a software industry. When you boil it down, crypto is software. That's what it is. And you're investing in productivity enhancing software. That's the way I look at it. But the early adopters and many of the people that are still very active prefer to be, I don't want to say rogue, but they are against centralization. There's a whole group that believe that we have to disrupt, tear down, redeploy the entire financial institutional market globally. I'm not there on that. That is not the future of decentralized finance. And yet they're still very active in promoting that view. And you even saw it in a scuffle. I don't have to mention the company, but just 10 days ago between the SEC and one of the CEOs of a very large platform company to actually push back against a Wells letter. That's unheard of, and not a really good idea either. You have to be compliant and you want to work with regulators to solve these problems. And what I worry about currently, because the press has run with a narrative which is not constructive to institutional investors, that the crypto community are cowboys and they want to disrupt finance globally and they want chaos. That's just not true. Most of the people, particularly the companies on this panel, are trying to work as hard as they can with regulators so that they can have a smooth transition to a more productive financial services industry. And that is where I sit and where many more people are going. They are working quietly with regulators, trying to standardize some of these mandates and get we talked earlier about just stablecoins. Stablecoins are not going away. They're here by the billions. The US government may issue one day, who knows? But the point is they are solving a problem, as many of these CEOs have just said. And most of the people that want to see this advance would like to have a more regulated environment, which means that we will be working with existing institutions, existing protocols. SWIFT has been around for a long time. It's not going anywhere. It will just become far more productive and less expensive and faster. One of the debates going on now, and I'll give you an example, Ethereum, while it is, the base platform, the level 1, and there's now level 2, productivity enhancers around Ethereum to make it faster. You have to kind of think of this trilemma, they call it. you need security, and you need speed and scalability, but you can't get all three at once. It's sort of a huge debate. And so other platforms are coming, and I'll give you an example that's very easy to understand that, I'm investing in. NFTs, in my view, will be larger than cryptocurrencies one day. There's just so much to do there. And I'll give you a very easy use case that people can understand. I'm a watch collector. If I buy a watch in the secondary market, let's say a Patek Philippe, I can't know that it's real until I send it to one of these services like a John Reardon in New York. I'm talking about high-end watches for $250,000, $300,000 or $400,000 that are being bought like art because they appreciate faster than art. And so I buy it as art, and I have to get it authenticated. I wish we could have an NFT for those watches that would give me its provenance, who's owned it, where it was originally authenticated, by whom, with all the box and the papers and everything else. It cost me thousands of dollars to get a Patek, secondary market Patek authenticated. And I have to wait weeks, if not months. I could get that done in a second on a chain with a contract. And I think that market is a multi-billion-dollar market, and it's going to be tokenized. It's going to have contracts. There's just so much going on here that works within the existing infrastructure, just making the existing infrastructure more productive. So I think the real potential is not to be the rogue cowboy and disrupt finance globally and all that narrative. It's just ridiculous. It's to work within the existing infrastructure, be compliant, and expand this market geometrically.
Thank you, Kevin. Andrew, coming back to you, and I would like to come back to the question of the established players today, in today's world, in today's financial industry. How do you see them reacting? Will they be adapting? Will they be agile? Will they be sitting back? Will they become dinosaurs? And do you think we're going to see, like, I think we used the example of internet earlier, the internet at the beginning, and how it then developed over time in many solutions. But it also led to some very big players, like Google is a perfect example. Do you think we're going to have a Google in the DeFi space?
Yeah, so I think the answer is that there's going to be a mix. There'll be a lot of institutions that are already adapting to this world. And you can look at Wealthsimple as an example. Once they started offering exposure to Bitcoin and Ethereum, I think I heard a number opened up 50,000 new accounts within 30 days. If you look at the banks in the US, particularly like Goldman Sachs, even JP Morgan now, Citibank are all now covering cryptocurrencies. I think some of these will, like every new technology, will learn to adopt it. And just like how they fought against certain utility from the internet 25 years ago, today they've integrated it in to make services better. I think you will see that a lot of the players are seeing that this is inevitable. They have to start using this technology because it's what people are asking for. And so it will get regulated. It will get integrated into the existing systems. But there will also be a lot of new players, and hopefully it's the companies on this panel that will grow. When you look at the top 10 largest companies on the S&P, 15, 20 years ago, today they're dominated by technology companies. Back then it might have been more industrial or financial services. Companies will adopt and evolve. Some won't, and they'll disappear.
Thank you, and I think that that's a very, very fair point. Let's move to the next part, and we touch upon it quite a few times already, indirectly. But what is holding DeFi back? And we use the words regulators, or the word regulators, many times already, and I maybe want to add a little bit of color to that. And I'm also looking at some of the questions that came in. To Kevin's earlier point, is there really work taking place with the regulators, or are the regulators becoming a bit difficult and painful? Are they putting the hammer down, without taking the time really to think about all the opportunities that are over here? Think about what's happening in China. That is not regulators talking with industry stakeholders. That's regulators saying this is out. This is not allowed anymore. So what are your views on the hurdles? And do you really believe that the regulators are going to be there to help and find solutions? Wouter, let's maybe start with you.
Yeah, absolutely. So there maybe one sort of more controversial aspect here is that, you know, what centralized finance does provide is that you have a middleman that you can hold accountable in some cases, or hold responsible for let's say your assets. There have been, you know, with crypto and with decentralized finance, there have of course been many, you know, published cases of accounts being sent to the wrong address, things being lost, assets being hacked, stolen, where there is no recourse to a centralized institution that can provide backing, insurance, etc. So I think where the innovation will come from, and this is what I think is exciting, is okay, how can we create these institutions in a decentralized way? So insurance on some of those events that are happening. I think until we solve some of those things and those projects you know, come to fruition, that's when you see the real sort of mass market adoption. I think that's to me one of the things that I would offer.
I would also say, Jos, I don't think anything is holding back DeFi. I think DeFi is like a tsunami hitting upon financial services right now, and the regulators are like trying to figure out how to control this and keep it under control. Remember, this was a business that beginning of last year, there was maybe 20-30 million dollars in it, and today has, I saw an estimate earlier of 160 billion in deposits with 6 or 7 million users. I don't think it's being held back. I think they're trying to figure out how to stop the tsunami coming in.
I think I was going to say, and Andrew's right on this. I mean, just this morning, flying around Twitter was a stat where a specific platform called DYDX is doing just over $3.5 billion of trade volume. Last summer, I think around September or August, Uniswap, the world's most known decentralized exchange, also did about $3 billion a day. And that's rivaling what Coinbase will do on their exchange. So I think that you're seeing users, you know, move into these various platforms that are on chain. They're not through centralized entities. But I think what's important to keep in mind here, your conversation really is about, there's going to be this barbell, and people are going to interact with this new world, this digital asset world, on various parts of this barbell. And maybe they want to be over here where they want the middleman, and it's most appropriate for them to have a middleman, someone who's going to custody the assets for them, who's going to figure out what is appropriate for them to interact with, which assets are appropriate for them to interact with, how safe those smart contracts, right? As Kevin said, this is basically just pieces of software. You know, is it appropriate? Is it safe to interact with that piece of software yet? This stuff is cutting edge, where maybe some new exchange is only a couple weeks old and it's got a lot of buzz around it and people in the crypto community are excited, but it can still be hacked, there can still be theft, there can still be bugs. And so there's an advantage to being on this part of the barbell. And this is where regulators are very focused, is how do we have this part of the barbell interact with this world in an appropriate way? And then you do have a bit of a Wild West going on, where the on-chain crypto natives are throwing their money into various new exchanges, pieces of software, interacting with assets that are brand new, flavors of the week. They may disappear within a couple days. I don't think that world is going to go away. I think the question is, if regulators push that pedal, the brake pedal too hard, all that'll happen is that activity will move to other jurisdictions. It'll force the developers to become more anonymous. And I don't think that that's, you know, really good for anyone. So I think it's really a question of how do you get regulators to get up to speed. It's a very tough job. I definitely don't envy any regulator who's looking at this space that has its own lexicon. It moves just at lightning pace. And it's definitely going to be a challenge, but obviously, as Andrew said, this is a tsunami that has woken up regulators globally, saying we need to figure out how to make sure that this is still respectful of, you know, what the laws in specific jurisdictions and is compliant and is safe for the investors. But at the same time, we have to make sure that you're not also protecting investors from participating in these opportunities in this new world.
I think there's also a fear from regulators. There needs to be a fear of unintended consequences. And we've seen that if the regulators push too hard and make it too difficult for the good actors to thrive, you're going to get a whole bunch of quadriga type companies out there, because clearly investors want exposure here. There's a lot of FOMO, fear of missing out, that's happening. And if the regulators scare the good players like Binance out of the country, you're going to get the small bad actors that are going to thrive off this and take advantage of people.
So one of the elements that you cover here when you talk about the regulators, and I would like to probably generalize that a little bit, and that's a question for you, Ben. The regulators, you know, it's new, it's moving very fast, it's complex. You know, do they have the skills? Do they have the expertise? Probably not. They need to build it up. But don't we also have a big educational issue? And you know, are you maybe all part of that issue? You all experts in this space. You understand it extremely well, but are you spending enough time explaining it and making, you know, the standard consumer or the standard investor understand it? When I look at some panels, you know, around this topic, you need 5 degrees in engineering to be able to follow what the discussion is going about. Should we do more in that space? Ben, what are your thoughts on education and spending more time explaining?
So I'll answer that in a quick second, but just wanted to jump in with some thoughts on what Andrew and Brian were contributing. So I think, yeah, I agree with what's been said around regulation, and I would just say that regulation in fintech, you know, and in crypto, it's not a barrier. It's you know, it really is an opportunity, and it's part of the process. It's part of the process with new technology. We've seen that a lot has evolved in the last 5 years, fintech and crypto, in all jurisdictions across the world, and so I think a lot of the questions in the Q&A that I'm seeing are around, you know, SEC regulatory crackdown, like, you know, what's going to happen here, and that makes sense because that's what's in the media, and there, to an extent, that's what's happening. But a lot of what's happening with SEC is trying to understand what's actually happening with DeFi. So you'll see there's, you know, they're engaging analytics firms to be able to understand what's actually happening at a transaction level within DeFi, and, you know, a bunch of different things like that, where it is trying to learn and get a better lens on what's actually happening. And not to say that's not going to result in some sort of regulation, but it is part of the process, and it does tie into, you know, they're trying to self-educate, Jos, and I think there is a duty on industry for sure to participate in those conversations. But, you know, industry gets frustrated. Like, you know, I think for people that have been in this space for a long time, you know, everybody will say, hey, we have a great relationship with the regulators. We have these conversations, and, like, you know, we've been having these conversations for years, and I think to an extent they do help. But at the end of the day, the regulators have a mandate, and it's to protect investors in their jurisdiction. And so when you have something like a quadriga, which Andrew talked about, which is, you know, millions and millions of dollars of investors' funds being lost due to sort of fraud and a bad actor, you know, the regulators are going to swing, you know, the pendulum swings, and they react, you know, very strongly. And that's what we're seeing in Canada right now. And so, you know, I think, you know, I think it's an interesting sort of process to see unfold, but, you know, I think we'll continue to see a lot more sort of learning amongst the regulators, but I don't think it's cause for concern. I think it's just sort of part of the process for any new technology.
They also have another mandate, which is to enable efficient markets, and we would make sure that that one is at the forefront once in a while also. But that's just a personal comment. Let's move back. Let's move on to one other topic that I really wanted to touch upon, and there's quite a few questions around that also in the Q&A. I'm an investor. You know, I hear what Kevin was saying about what he's been doing with his portfolio, how he's been building out his exposure to these assets. But, you know, at the same time, when I look at these assets, I look at the companies in this space, I see a lot of volatility. And, you know, as an investor, something that that could be scared about, particularly if I want to be, a longer term investor. I'm not doing day trading over here. What is your view and what's your advice on that? Should I sit back? Should I wait for this to develop and reach a level of more certainty and where markets and prices are going to be less volatile? Should I step in now? Should I have stepped in a while back? What are your thoughts on that? And maybe Kevin, let you start on this one because you are an investor in this space. I'm
going to answer that, then I'm going to sign off, Jos. I've got a previous commitment at 1 o'clock, so I'll be just a heads up on that. I now have 20 positions in cryptocurrencies, tokens, level 1, level 2 chains, well thought out in my view, just in diversity. The volatility is the most volatile portfolio we manage. It seems to trade in high correlation to Bitcoin itself, and I think that will change at some point, but you do see a correlation that shouldn't exist between an asset like Bitcoin and a chain like Solana or Ethereum or any of the level 2 protocols, and so you have to get ready for up to 50% declines on an annual basis. That's been happening over and over again, and the reason that's happening, in my view, is that there is no institutional money at play yet. I know everybody likes to think there is, but the truth is there isn't. And the purvey of crypto right now is within primarily high net worth individuals, certain hedge funds, but the big boys aren't there yet. And they will, when the regulator rules, they will come in for 1 to 3% allocations, and that is trillions of dollars. And so we'll get stability, we'll get market-like volatility when institutions start to invest in this space. And I think that will happen over the next 3 to 4, maybe 5 years. But I'm willing to, the way I adjust, for that is I can own under our mandates up to 20% in any one sector. We won't be 20% in crypto. That's not going to happen. But we're happy to get to 7 this year. Others have different views, obviously, but it is the most volatile asset I have. And you got to hold your nose and just ride the wave. And some people try and day trade it. I mean, I think that's crazy. I buy these positions for long-term value creation. And what I've decided to do at the end of next month is just disclose my positions to avoid this idea that so many investors that have large social media followings are being accused of buying an unknown coin and then promoting it. That's horrific. That just doesn't help anybody. I don't want to do that. I'm just going to disclose my positions and the changes that occur every quarter, just like I would do in the real world of investing in stocks. So that's my plan. I just want to thank everybody for this panel. I'm going to exit, but thank you. Great. And I also to the NEO. I mean, Jos, all of us are in debt to you for providing the platform that lets us bring these great CEOs, their companies, their messages to the market. You are the most entrepreneurial exchange in North America. I intend to continue bringing my best ideas to you. And we can go anywhere from the NEO over to Europe, onto other North American exchanges, and still keep our data, our base of shareholders on the NEO. Thank you very much, and take care.
Thank you, Kevin, and thanks for your participation and all your insights and your nice words about NEO. And indeed, it is quite.
Well, I wouldn't say if it wasn't true. Take care. Thank you.
Yeah, I think I know you long enough for that, and it is also very exciting indeed to see the 4 of you here, who are leaders in this space, all being listed on our exchange. But I would like to finish with the same topic that I covered with Kevin, and he also, in fact, touched upon what was going to be my last question. So, what is your advice to investors? And he briefly touched upon Bitcoin. Is Bitcoin a benefit or a curse for decentralized finance? Wouter, starting with you.
Yeah, so in terms of advice for investors, it's really, if you want to learn about DeFi, and I see this myself as well, and you want to understand these protocols, with everything, right? In these volatile asset classes, only invest what you can afford to lose. But only when you have sort of skin in the game is it when you start to track it, understand it, why is it going certain directions. And it is, I think for many, it can be an interesting learning curve. I think Gen Z is definitely also doing this. So my advice is for sure play in the market, understand it, but of course don't do it so that you can buy a house in a few years. I think that shouldn't be the strategy. In terms of Bitcoin, if it's a blessing or a curse, the way that I view it is really that Bitcoin was the first thing that really brought us blockchain, right? So whether it is the best thing or the best asset at the end of the day, like we won't know, but it brought us a new way of thinking, and it brought us innovation that I think is at the forefront of changing our entire financial ecosystem at the moment, which is happening through DeFi. So I think in that way, it's brought us many good things.
Thank you, Wouter. Brian, your thoughts for the investor and your views on Bitcoin and whether it's a good thing for DeFi or not.
I think Bitcoin is fine. I think it's, as Wouter was saying, it's kind of the gateway into this space, but I encourage investors who are really in the Bitcoin rabbit hole to look around at what else is out there. And I always tell people to follow the developers. In terms of investors who want exposure to the space or are considering it, I always say, Kevin mentioned how volatile the asset class is. The question really is just, what is your time preference? If you are looking at this space and saying, in the next 5 years, is the world moving more towards more decentralization? Are more things becoming digitally native? You've watched Airbnb disrupt the hotel industry, Uber disrupt the taxi industry, and now you have these various blockchains, Bitcoin, Ethereum, other ones that are disrupting financial services. So if you agree with that thesis that it's going to continue to become more prevalent, more popular, socially, it'll become more normalized, then I think it's important to have exposure to assets in this space. I'm not going to say, which one people should buy, but, they should go in and build some position and say, they're going to ignore the volatility. They're going to do some research. They're going to do some homework and get smart on the space and start understanding a bit of what the movement is all about, and say that this is about a 3-year or a 5-year or a 10-year bet, and it becomes a thesis trade. It's not something to momentum trade. I've personally tried to day trade, and I've done terribly. It's just the space is too wild for that. So I think that that's maybe not the best way to be a new entrant into the market to chase the flavor of the week. But I do think it's an important space for people to consider in a portfolio and see that there is so much asymmetry still here. There's a lot of room for these assets to grow in the next 5-10 years.
Thank you, Brian, and Ben. Same question for you. And just to be clear, the reason that I asked that question about Bitcoin, that is, Bitcoin goes up, all companies, all tokens linked to the DeFi space go up. Bitcoin goes down, it all goes down, and that's a bit where my question is coming from. But I'll leave it to you to react, Ben.
Yeah. So on the investor question, I mean, Brian, I think put it extremely well. It's DeFi is the new internet, so the best way to get involved with it is to go and use it. I think it's really about just getting involved, playing around, really seeing what it's all about. And then I think like Wouter said, not betting your house on the crypto space. I think that's very true, and it's important to keep in mind, especially for younger investors. Probably a lot of people on the panel and in the audience have been in the crypto space for a long time. When you see these really hot markets, it's really easy to kind of get excited and want to sort of go all in, and so I think that's something that's important to keep in mind. But going back to what the best way to get involved is to just create a wallet, buy a few dollars of a token and just kind of do some transactions, see what it's all about, see why this new technology is important. And then for Bitcoin, I think it's definitely it's a gift. It's part of the process of of this technology unfolding. I don't think any of us would have been able to predict that you had this much transaction volume through decentralized finance in 2020-21. If you rewind back to where we were at in 2017, nobody predicted that. So I think it's really a good thing, and I think we'll continue to see this market evolve, which is going to probably create a bit of a separation from Bitcoin and some more pure DeFi plays as we go forward.
That sounds like it was a nice way to get started, but it's time to part ways. But I don't want to put any words in your mouth. Let's end with you, Andrew. You were a banker in the capital markets. I hope I said it properly this time. And you have spent quite a lot of time with many investors. So you must have some good insights on what you think and how they should think about this.
Yeah. So the first thing I would say is volatility is good. I don't know why that has a bad word. Volatility is what has enabled Bitcoin to be the best performing asset on the planet over the last 10 years. Simply put, I am probably a guy that has bet his house and probably several houses worth into this, including being the largest shareholder of my company, tokens.com, which is public. But to your question about Bitcoin's relevance to DeFi, I would say today it has none. Bitcoin today functions on 12-year-old technology, crypto mining technology, which I like to make the analogy is a little bit like flip phone technology as the smartphone is coming in. It's just too slow to be relevant in DeFi today. The majority of what's happening in DeFi has really almost nothing to do with technology. It's this new system called staking. That is what we do at tokens.com. And I think while the other companies on this panel are right in trying to find ways to provide that access to people, I think what we've done at Tokens is we're doing it on your behalf, and being sort of that inventory of crypto that we're using to do staking and generate additional tokens is we're taking care of the reporting, the security, the regulation on behalf of the investors so that they don't have to do it themselves, because it is intimidating. Who wants to go out there and figure out what to buy, how to get it to create some kind of a return for you and keep it safe? So again, I think volatility is good, and all the crypto things I've done, I've never tried to hedge out volatility because that is where the returns come. Yes, you've got to stomach a 50-60% loss 1 month, but you're going to eventually get that back. And if you look at crypto volatility, it's like this, and it's pointing in one direction.
Thank you, Andrew, and I think the point that you make and that all of you have been making is you have to look at this from a long-term perspective. And volatility is dangerous when you are playing games and when you try to step in and make a quick profit. And that is where we see a lot of people, making substantial losses. And often it is, sadly enough, retail investors also. And I also really like your comment about Bitcoin, because I think that is something that people need to realize. I think that dissociation should take place. And you should really look at DeFi for what it is in itself and not for how it associates with Bitcoin. Gentlemen, I think this was a great panel discussion. We ran a little bit over, but I would like to really thank you for your insights, your thoughts. You were very candid in your answers. We appreciate that. A big thank you again to Kevin in his absence to create a bit of a framework around the discussion, and also show how someone like him is committed and investing in this space. And I think that is a big signal for many people in the audience also. A big thank you to the audience for joining us, for staying with us. Quite a few are still there with us. And thank you for participating. Thank you for your questions. I think we covered quite a few of them. And then last but not least, just coming back to our sponsors who made this possible. Thank you to them: Baker McKinsey, Walden Lardner Javet, Dentons, Goodmans, Goling, McCarthy Tetro, Macmillan, Miller Thompson, Odyssey Trust, Olympia Trust, Stikeman, Elliott, and Wilder Borderlies. And thank you again to the four of you, Brian, Wouter, Andrew, Ben. I can only but do one thing, and that is to wish you a lot of success in the way forward. And someone asked the question, what is NEO's role in all of this? Well, I think, or what's NEO's role in decentralized finance? And I would probably say making things like what we did today happening, enabling companies like yourselves to go public, supporting you and being ready to be part of enabling the innovation economy, the future of finance. And I think that as all of you, I'm sure, have experienced, it's a different experience to work with an exchange like NEO, who is focused on the future, than to work with exchanges that are having sometimes a hard time to understand what the future is about. So thank you very much, everyone. Wishing you a wonderful day, and looking forward to our next sessions. I'm sure there's going to be a few with many of you here on the panel also. Take care. Goodbye.
Thank you.
Thanks, Jos.